Palantir's recent Q3 2025 earnings announcement left no doubt about its position as a leader in this field. The company demonstrated extraordinary growth that highlighted both its financial strength and its continued momentum in a highly competitive market. During this quarter, Palantir reported a remarkable 63% year-over-year increase in total revenue, reaching an impressive $1,180 million. This kind of growth rate is rarely seen in a company of its size and market presence. The company also announced that its total contract value surged 151% to an astounding $2,800 million. These numbers reflect a combination of strong demand for its products, expanding adoption among new clients, and successful retention of existing ones. Even more astonishing was Palantir's Rule of 40 score, which soared to 114%. For context, this score measures the balance between profitability and growth, and it is extremely rare to see such a high result, particularly for a company with Palantir's scale and maturity. However, despite these exceptional achievements, many investors are expressing concern that Palantir's stock price may already reflect much of its future success. The company's valuation metrics have climbed to extraordinarily high levels, reaching multiples that are several thousand% greater than the averages seen in the broader technology sector. This has raised questions about whether the company can sustain its current momentum or if its valuation has become too expensive relative to its growth prospects. Because of these concerns, prominent investor Rick Orford has voiced a cautious stance regarding Palantir stock. Although he acknowledges the company's strong fundamentals and its unique role in the artificial intelligence revolution, he remains hesitant about its near-term investment potential due to its already lofty valuation. Orford, who is ranked among the top 1% of financial professionals monitored by TipRanks, explained that Palantir represents far more than just another artificial intelligence company. In his view, Palantir embodies a much larger concept that revolves around whether major governments and powerful corporations are willing to entrust one private company to effectively become the central intelligence guiding their strategic decisions. Orford emphasizes that Palantir's growth trajectory is something most companies can only dream about. He highlights that the firm's performance numbers are so impressive that other technology firms would envy its success. Nevertheless, he cautions that Palantir's power extends well beyond conventional client relationships. The company does not simply sell software tools or data analysis platforms. Instead, it integrates its technology directly into the decision-making infrastructure of its clients, creating a level of dependency that is unusual in the technology industry. According to Orford, what makes Palantir truly different is that it does not merely present data in a digestible form. Rather, it interprets that data, generates insights, and even suggests what actions should be taken next. This capability gives Palantir an extraordinary level of influence and control over how organizations operate. Orford points out that this level of integration raises broader questions about the future balance of power between private technology companies and the institutions they serve. Ultimately, he believes that this dynamic is not just about providing software, but about determining who controls the flow of information and decision-making processes in critical systems. This deep integration also creates what Orford refers to as a strong form of stickiness. Once a client incorporates Palantir's systems into its daily operations, removing or replacing them becomes a massive challenge. This is especially true for government agencies and large corporations that rely on Palantir's platforms to manage sensitive data and mission-critical decisions. Over the past few years, Palantir has maintained a solid relationship with the United States government, which remains one of its largest sources of revenue. These contracts are often long-term and highly profitable, providing a stable foundation for the company's financial performance. In addition to its government work, Palantir has been expanding rapidly into the commercial market, securing new deals with corporations across multiple industries such as healthcare, manufacturing, and financial services. This diversification has helped the company reduce its dependence on government contracts while positioning it for broader growth opportunities. Many analysts believe that Palantir's ability to continue scaling its commercial business will be the key factor that determines its next phase of growth. Orford explains that when an investor buys Palantir shares today, they are essentially betting that the company's commercial revenue will grow faster than its government revenue in the coming years. This shift toward the private sector could unlock even greater financial potential, but it also carries risks as the competitive landscape in commercial artificial intelligence software is becoming increasingly crowded. Palantir's challenge will be to maintain its technological edge, strengthen its customer relationships, and continue proving that its software delivers measurable value. On Wall Street, opinions about Palantir Palantir remain divided. Analysts are split between optimism and caution. There are 3 buy recommendations, 11 hold recommendations, and 2 sell recommendations. This gives the stock an overall consensus rating of hold, meaning that analysts believe it is fairly valued at its current price. The average 12-month price target is $187.87, suggesting that the stock may remain relatively stable in the near term rather than experiencing large swings upward or downward. Despite these mixed views, Palantir continues to represent one of the most fascinating companies in the artificial intelligence sector. It has built a reputation for developing a cutting-edge technology that helps governments and businesses make faster and more informed decisions. The company's software platforms such as Foundry and Gotham are deeply embedded within many organizations that rely on them for critical operations. As the world becomes increasingly data-driven, Palantir's ability to provide structure, interpretation, and action-oriented insights from massive amounts of information could keep it ahead of the competition for years to come. Investors who believe in the long-term potential of artificial intelligence and the growing demand for advanced data analytics may view Palantir as an important stock to watch closely. However, they must also recognize that its valuation already reflects extremely high expectations, leaving limited room for error. If Palantir continues to deliver exceptional financial results and secure more large-scale contracts, its current valuation may eventually prove justified. But if its growth slows or competition intensifies, investors could see volatility return to the stock. In conclusion, Palantir stands as a symbol of both innovation and controversy in the world of artificial intelligence. Its financial performance is impressive, its technology is groundbreaking, and its influence continues to spread across both government and private industries. Whether it will sustain this success and reward shareholders in the long term remains to be seen, but one thing is clear: Palantir has already changed how organizations think about the relationship between data, intelligence, and control. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.